All right, coming up on this program, AutoNation popping after their fourth quarter results really trump estimates. We'll be speaking with the CEO, Cheryl Miller, about the results, but also how the coronavirus is affecting the auto industry. And time now for Bottom Line. We look at some companies that are worth watching this morning. And today we're going to focus on one. We're going to stay with autos and take a look at AutoNation. It's surging in pre-market trading after its fourth quarter results topped estimates. Joining us now in New York is Cheryl Miller, AutoNation CEO. Chris Watling of Longview Economics with me as well. Cheryl, I'm sorry that I'm not there, but it's great to have you with us. So your quarter was really solid. So I'm curious as to your outlook in terms of demand in the U.S., but also specifically demand that you see or hear about from China with the coronavirus.
Yeah, good morning, Alex. So it was an all-time record for AutoNation, not just for the quarter, but also for the year. So our quarterly results were $1.74. That's up 71% in EPS for the quarter. And then the year was $4.98. So that was up 15% for the year. In terms of demand, we feel really good. The customer's employed. We had 3 interest rate cuts last year. So as I look at 2019, we had 57 million units total between new and used. As I look at 2020, we think it'll be similar. And we continue to see that migration from new to nearly new in the industry.
So, hi, Cheryl. Sounds as though you feel pretty good about the consumer in the States. So I wonder how you would read that. Clearly, I think financing for autos has got cheaper over the last 12 months. How do you see the consumer?
Yeah, the consumer is in really good shape. So financing has gotten cheaper, which is important. But for affordability, what we've seen in new vehicles is about a $5,000 increase in prices over the last 5 years. And that's what's causing the shift to used vehicles. So as I look at AutoNation's profitability in used, our used vehicle gross profit was up 21% in the fourth quarter. So while the new vehicle market is holding in there, it's definitely a very strong market for used in the U.S.
That's extraordinary how the profitability is holding in so well on those used vehicles. So is there room, therefore, to squeeze those margins to get more cars out the door? Presumably it sounds as though they're healthy enough to do that.
Yeah, we're always trying to find that right balance. And I would say also in new vehicle sales, one of the great things year over year for us is we've reduced our inventory by about 11,000 units year over year in new. And that helps us keep that optimal mix for customers between volume and pricing.
Can you give us some perspective about how the coronavirus, though, might be affecting your business? I know you don't sell into China or anything, but you have to have some kind of read-through on it.
Absolutely. It's a worldwide supply chain. We saw this many years ago with the tsunami that hit Japan. So in certain parts of auto, it can be a concentrated supply chain. What we've seen so far is some issues for Hyundai in Korea, where they were importing parts from China. Fiat Chrysler has talked about some things, so we'll continue to see how it plays out. The good thing over the years, though, is automotive has diversified its supply chain to a degree, and certainly the tsunami in Japan taught us some lessons about that, but it is very interconnected, and so we'll have to continue to keep an eye on things. We feel like we have a very healthy supply both in parts and inventory right now, and again, 52-day supply in new. We were able to go through the GM strike in very good order, and so I feel good about the inventory that we have on the ground today to meet consumer need.
Yeah, I was going to ask you about that diversification of suppliers. I think that's a really key point because you suggested it looks better, but is there any pricing pressures that come once you try and switch supplier? And I guess the other question is, how quickly can you do it? Is it literally flick a switch, or is there more to it than that?
It depends on the product. So in Japan, what we saw is an issue with semiconductors, and that's harder to flip the switch on. So with China, I think we'll have to see which factories are impacted depending on where they're located. So if something is in Wuhan, where you saw some of the suppliers to Korea, versus if it's in Shanghai, you'll see some differences there. But I know that people are very focused on making sure that there's adequate supply chain. The good news for us is we have an adequate parts supply in the U.S. today. So certainly for our customers from a service standpoint, we feel good about where we are with supply chain.
So how long do you have? How long are your inventory in terms of car parts until you have to kind of replenish? Can you give us some insight into that?
Yeah, if you think about the GM strike, for instance, that was 40 days, and we certainly had adequate supply through that period. That got a little bit tight towards the end of that, but in most cases, you have 40-plus days of supply, and with AutoNation selling 30 brands and having so many stores across the country, we're able to share inventory amongst our brands for different parts in the chain and amongst our stores as well.
So that's interesting. So I was just thinking, if you sort of take that to a higher economic growth level and you think about the U.S. economy, I'm guessing you would argue it won't miss much of a beat at all, assuming coronavirus is dealt with over the next sort of weeks and months.
If it's dealt with in a reasonable amount of time, I think that the auto industry should be in good shape. We'll see how it develops, but I do believe that everyone is focused on the factories, on trying to contain this and get people back to work. So if it extends over a long period, it'll be hard to tell, but if we keep it within a reasonable time frame, I think it's doable. And we had some really good lessons learned from the tsunami in Japan years ago.
Fair point. And then to bring it back here to the U.S., you mentioned that the average car prices have kind of been rising as a sign of real strength. What happens then to the used car market? Is it get better because the prices are more expensive? Or are we seeing consumers just feeling better, able to rotate into those more expensive new cars?
So what's happened for customers is we've actually seen the price of new vehicles push people towards the used vehicle market from an affordability standpoint. So a $5,000 increase over a 5-year period is about 15%. And when the customer comes into the showrooms, even though there's great content on the vehicles, some customers take a pause and shift over to what we call nearly new. And that's why we think the total supply will stay around 57 million for the year. But we do think you'll continue to see better affordability in used for customers.
Cheryl, thanks so much. Really, really appreciate great insight to the auto industry. Cheryl Miller of AutoNation.